Alright, yo. Um, Welcome. Um, so I wanted to do my analysis and I wanted to give an update. So, um, first goal, which on my whiteboard as well, was pass a funded or like a mock-up funded on a paper trading account. Which is tops up is target is 6%. And you're not allowed to make 50% in one single trade. Didn't happen. So a lot of consistency here, and it's really nice to see these results. So that's the first account, and now I'm gonna do another one. So I'm gonna do like two, and then I wanna buy somewhere around February. So I wanted to start February with like locked in, and then buy a funded account, pass a funded account from uh 1 February till what was it? Till 0604. So that's we said in Europe. I think in American it's the other way around, but it's the 6th of April. So in that period I want to pass a account and get a payout as well. So now this time from right now until February. So 15, I have like a lot more days. So this time I want to still be on demo. And so I'll probably be on like one or two accounts more, and I want to pass those as well. So I want to go and reach 6%. So 106k here. Then I'll create another account and I want to get 6% on there as well with consistency. Um, so yeah, now I'm gonna do like an analysis. It's now Martin Luther King's Day, and it's the PM session, and market is currently on holiday. So the PM session market is closed. AM session market was open, and I made a couple of trades on that as well, um, which were like really nice setups. I don't know if you can really see it. Don't really have context here. So market open somewhere around here, I think. Yeah. So I got stopped out market open, lost 1% fully there. So I thought that this was going to be the turtle soup. We closed there. We tap into that rejection block. Failed to do it there. We actually swept the sell side on the rejection block. So what I mean by that is this: the consequent encroachment. We swept the candle there. We respected, swept that, respected it. So I thought that was going to be us going higher, and thought that this was going to be our little Judas swing, but actually Judas swing was a lot lower. We had like half hour Judas swing, I would say, and we swept the equal lows. Actually, I had that there. My full analysis, don't know if you can see here actually. Um, so at the equal lows here, I will explain this as well later. So we had equal lows marked out as well of that standard deviation. So swept that there, swept that there. Then I went short here because I don't even remember. Tapped into that order block. Oh yeah, it's 10 a.m. We got a big push or big push. We got a small push to the upside, and that's basically the open high low close. That was what I was thinking. But I thought that the price was still going to be bullish, but I saw this small retrace to the upside. Still that had in mind, so I actually got a silver bullet entry right here, and I just targeted that imbalance. Didn't even go for a low. I wanted to go for this imbalance because I actually had a long position here as well, which I later canceled because I wasn't really confident with that. But that standard deviation gave me something. I don't even remember. Yeah, they gave me this high. So this unicorn setup, was what I was anticipating, what I was looking for. So we actually displaced lower there. So that was why, it wasn't why, but that's why I entered the trade later, because we displaced through that unicorn setup. But still my draw was bullish. So we displaced lower there. But later on I entered here which is actually another silver bullet. So we tapped into that unicorn, got a small retrace. I got another unicorn here, by the way. So it's a high, it's a low, high, lower, low, higher, high. This is the breaker block overlapping with a fair value gap, so I entered in that unicorn. Stop was, I think, at this low somewhere. Oops, that's the wrong one. So somewhere around here. Then targeted the easy target, which was the high there. Got closed, yeah, right there on that high. Then I had a small runner, which I had somewhere, this is somewhere like a 3-minute order block. I had it at that low. Then I got turtle souped at that low, so it was somewhere, it's like a 4-minute, yeah, it's like a 4-minute order block here. So we did respect that 4-minute order block, but I got, look, I got close there. So I had like my stop at break even at like this like under mean threshold. So I had somewhere around here. I got stopped right there. And then market had a small push to the upside, sweeping that high. Still not my actual target. My runner was going for this inefficiency, which is actually a unicorn as well, which is SIBI. So yeah, market didn't get there. So that's why this analysis, which I will go on later. So yeah, I'll go on later with that analysis as well. Then there was the macro from 1150 to 1210, and we actually got a sweep here. We went lower. Where did I enter off of? So I bought here. Sold to here. I think I actually got stopped out here. Wait, is it? I think it is. Yeah, I got stopped right there, like with a really small amount. Then I went short here because of the macro that was coming. And this was also a unicorn, another unicorn, I think, as well. Yeah, right here on the 2-minute. So this was actually the inversion ABS strategy entry. So we closed below there, but I have like this entry pattern that I did myself, which is like 0.5 minus 0.5 standard deviation of the imbalance singular fair value gap. If we close under there, then there's no trade. If we close on top of there or like between here and this place, or no, sorry, damn, close below this inversion fair value gap, then this is where it can go. It closed below there, so I was waiting for a retrace into the inversion fair value gap of consequent encroachment, where we already swept that low, so this trade wasn't valid anymore. So then I was anticipating this high, low, higher high, and I was anticipating a lower low. So then I looked on bigger time frames, because there's a fair value gap here, there's a fair value gap here. And if I go like to do the 3-minute, then there isn't any rate. Oh yeah, the 3-minute, so there's still 2 fair value gaps. And then on the 4-minute, there's also still 2 fair value gaps. Then I go to the 5-minute, and on the 5-minute there is no fair value gap. So I was going to the 2-minute again. It's like the smallest time frame, because that only had like 2 fair value gaps. Only 1 minute had fair value gap here that already got filled in. So I was waiting on the 2-minute, and then we actually got a break here, close below there. So I was waiting for a retrace into consequent encroachment of this inversion fair value gap, which is the last down close candle of this leg. So stop was, I don't even know where it was. But oh yeah, so we have this imbalance here, so stop needs to be above there. So stop was somewhere around here. I think it was above here. And then I targeted the low here and then closed out of there. So right here, also standard deviation, projection there, minus 2.5 standard deviation. Just was an easy target for me. Look really good. Also inside the 1150 to 1210 macro. It fit the trade, so that was perfect. Reverse off there, now accumulating. That's like the whole trade breakdown actually, but didn't even want to do that, but still, I did it. So I'll remove this. All right, so now I wanted to do my analysis. like this whole weekly analysis with the economic calendar as well then. So yeah, just do it over again, and then this is something that I just all removed, but yeah, the turtle soup here, you'll see that, and we're now in a big accumulation. Also news. So Friday was accumulation. Monday is gonna be our accumulation because we have a bank holiday, and Tuesday is gonna be our manipulation. Wednesday is gonna be our manipulation slash reversal. Here's gonna be our reversal slash expansion, and here's gonna be our expansion slash reaccumulation, or I don't even know. So we'll see. So then this is basically us going into tomorrow, into Tuesday, and then Tuesday is going to be our manipulation. So this is going to be all Tuesday. This leg to the upside isn't going to be Tuesday, or maybe it is, I don't even know. We'll see if this is going to be Wednesday or even Tuesday as well, I don't know. So what I'm anticipating is we have this equal lows that we just swept, which is market open of today, which I had like a few trades into here. So what I think here is we're gonna do is we're gonna go to that SIBI, the unicorn. We're gonna tap into that. We also have a 30-minute order block there, which is a bearish order block. Then we're gonna accumulate into Asian session. We're gonna manipulate in like a London session. I don't even know, but we're gonna accumulate. We're gonna manipulate. We're gonna distribute. We're going to go to the -1 standard deviation. We leave buy side there. Don't know for sure, so that's why I'm gonna do my analysis again. We're gonna tap into the rejection block consequent encroachment, which is the -1 standard deviation. Then we're gonna go to the upside, distribute to the upside, and we have our standard deviation from there as well. And then buy side is lining up with that, and the Tron liquidity, which is the daily high, which is this high, I think. Yeah, it is this high. Is our Tron liquidity. So this is our Tron liquidity. So I'm gonna do my analysis again and see if this, if I can send it to Aiden, to see if this is valid after doing my full analysis again. So we're gonna see. So let's go to like the beginning, which is like a 6 month. Like on the DXY, I even need a 12 month to see where the 6 month is going. So, but here it isn't even necessary. We can see in the 6 month we're bullish. 3 month we're bullish. We got no imbalances here, so no order blocks here. 2 months. If you go here to the 2 month, actually, we have a up close candle. We have a gap here, which is a Vervae gap, which is a SIBI. So this is actually our order block because it's the beginning of the up move. Why not all these candles? Well, because this candle has the imbalance, and this candle to here, there's no imbalance between there's no imbalance below here or anything. So this is the candle that has the imbalance. So this is our order block. It's like 2 monthly order block. Look where we stop. Look what we respect there. Then we go to a lower time frame, and we see this month candle still has a month to close. So this isn't our order block yet, this down close candle. So we go to the 1 month, and we see that this candle closed, this candle closed, this candle closed. We have a Vervae gap here. You have a down close candle. There's no Vervae gap here. So this whole thing can't be our order block. So it's just this candle is our order block, which has the imbalance. So here's our order block. Then we go to the weekly. Weekly still has the respect of the 2 months order block consequent or mean threshold. So yeah, so on the weekly, we are in a 2 monthly order block. We already got the reaction, but we have nothing here. So we go to a lower time frame. I see we could project equilibrium from here to here, but that probably never gets stepped into. Why? Because if we look on smaller time frames, we have a daily order block here. Why is this a daily order block? Because we have the imbalance. So we go to a bigger time frame, and we go here and we look for the largest order block, which is into this range. So I could see there is a 2-day order block here. So that would be these consecutive candles, right? But if we go to a bigger time frame, the biggest time frame where we still have the order block, on the weekly we don't. On the 3-day we have. So on 3-day with the imbalance is our order block. As you can see, we reacted off the order block there. We got a displacement back to the upside. We close above this inversion for Fourier gap. It isn't a disparatory breaker setup because we don't have a breaker inside of here. But we did close above this inversion for Fourier gap. Just something that you got to keep in mind, but it really isn't anything. Then I go to the lower time frames. I go to the daily. I see that we have a breaker here. We have a Fourier gap here. So if this wasn't an anticipatory breaker setup, then we would have to wait for the last up close inversion for Fourier gap to get closed above. Well, that's all the way right there. So we look lower. Then I see on the weekly we have a rejection block right here, which we tapped into right there. Also don't even know, but let's see. Almost at the first quadrant, but yeah, we have a rejection block right there. We did tap the rejection block there as well. But yeah, I wanted to go to this 3-day, and on this 3-day we actually have a order block here because this has an imbalance. Weekly doesn't have an imbalance, so the biggest time frame has an imbalance. HR is our order block. Let's remove this because it gets in the way. Then we have buy side here. Also something that I know because I already did this in a slide couple of times. Let's go to like the biggest time frame right here, 6 months, where we tap the rejection block there. 3 months, same. Tap the rejection block there already. 2 months, same. Monthly rejection blocks all the way right there. I get the lowest wick there. So then on the weekly, we have buy side here on this weekly, and we have a rejection block here. It doesn't look like a big rejection block, but actually is because it's a weekly time frame. So we'll probably get a speed bump here. It isn't a big reaction, but it's just a speed bump that we take trades on the 1 minute. So you think we're gonna go through this without having a speed bump? This is gonna be our speed bump. So we gotta keep that in mind as well. So there's a weekly rejection block. There's buy side above here. All right. Yeah, we could just leave that. All right. So back to this order block here. So the order block imbalance is here. So we tap that there. So we could maybe see like a small retracement into where? Well, this candle has 3 days to close. We have a BISI here. Don't have BISI there. We look for a singular for Fourier gap. BISI here. No 2 BISIs here, so there's a BISI here. Which we already tapped into, by the way. Alright, yeah, we actually did. So now I'm already seeing that the analysis that I was about to send could actually fail. So there's a BISI there, order block there. But yeah, it does seem like we're really bullish. Don't even want to tap into that first quadrant. Already tapped into there, so I don't see us coming back here. So I could just mark this out. Don't really ever do that, but I don't see us go back there. So I have a BISI there. Got a reaction block, or we got a order block reaction here. Just mark it out like that. Got a reaction there. That mean threshold went lower. Where did we go? Go to like, if you go and find like an order block, there's an order block here. Because this has the imbalance, got disrespected here. But if we look for the highest time frame on the 18-hour, there's actually an order block which was still in the same range as that other candle. And why is this an order block? Well, it has the imbalance. It doesn't really look like it, but it does have the imbalance. So this was actually our order block, but as you can see, we went lower than the order block. So this actually looks like our turtle soup or our purge and revert. Look at what we did. We went lower. We set that order block. Doesn't you can always see if it's actual order block or not. This is like a doji candle, so you could see like this wasn't really an order block, but we see this as our order block. But yeah, you could I think you know what I mean. But That's our order block. That was our order block. So turtle soup that. Went up again. Let's look at like the rejection blocks that we had. So yeah, we created a rejection block here on this candle. So you gotta don't see these candles, look at only these two candles. Then we had a rejection block there, already depth constant encroachment, so that isn't valid anymore. Then I see we have this big rejection block here now. And why is that our rejection block? If you look at the biggest time frame, this has the body overlapping. I want to see as a rejection block where the body doesn't overlap with the wick. So here you can see the candle next to that. The body doesn't overlap with that. On the 2 hour it does, like slightly, but this is the same as the 12 hour. So yeah, we turtle soup this. This is now our rejection block. So this is our imbalance as well. We're now accumulating. If we go to like 4, you could definitely see it. We're accumulating. We didn't tap constant encroachment of this rejection block, so there's still sell side liquidity here. And now you can see we have a lot of rejection blocks here. So if you go to like to the biggest time frame there is, that has the rejection block and where it didn't tap constant encroachment. Well, it tapped constant encroachment already here. So I want to look at this rejection block anymore. Here we tapped it as well. It was like the same as well, but didn't. Oh yeah, where you tapped constant encroachment there, or where you tapped constant encroachment here, you could already see it in hindsight. Then if we look right here, tapped constant encroachment, or just fell short of constant encroachment here. That's why we swept that buy side. We went lower. So this is already been used as well. And I know that ICD says that once it gets used, retail traders think that it's not valid anymore, and ICD does. But and here, I don't know. It does. You use the next one. You'll see, or it works, but not funded yet or profitable yet. But it works. I'm gonna be using it like this. So yeah, tapped constant encroachment. Wait, where was it? Yeah, here as well. Tapped it there. 4 hour, was this here in 4 hour that we had? Yeah, all right. So we tapped it there. So we go to the bigger time frame. We go look at this candle. We look at the biggest rejection block we can find without a wick overlapping with it or a body overlapping with it. So this is the biggest one I could find actually. This is the biggest time frame where I could find it. Really 6 hour. That's where I could find the biggest one. Here. So this is our rejection block. Why isn't this 8 hour rejection block isn't really a big wick? And if we go to here, and if you go to like get a quadrant in there, here, where was it? Yeah, like the 8 hour. So yeah, last quadrant. What is the last quadrant? What is it? It's basically constant encroachment of the 18 hour. So I could see this 18 hour constant encroachment get tapped into because we're actually bullish. So we'll slip out of it like a bit, or you'll see. But so yeah, I do see this to get reached, but I'll just use this right here. So this is the rejection block. So we could tap in there. So on the 4 hour, we're actually accumulating here. We look at this to this, this to this. We're inside this range. So we want to accumulate out of here, or we want to manipulate out of here. And this already has been turtle soup, so I don't really see us coming back here as well. But yeah, we could. So let's see what we do further. Let's actually see. So we're accumulating inside of here as well, as you can see. So we're using power of 3 as our bias as well. So we have that rejection block. Let's look further here. Yeah, so I'm looking at that bottom rejection block. What you're thinking probably. 12-hour rejection block here, biggest one. Sell side there. Rejection block is right here. Right there. So we look inside of this range and we want to see power of 3 inside of here. So we go fractal here. There's sell side here. Because we want to see on bigger time frame this rejection block on square encroachment. So we look with the power of 3, we look like we want to see a manipulation to the upside, and we want to distribute here because we want to go here. So if you go to like use the power of 3, then we're accumulating, we want to manipulate, and we want to distribute if you think like that. So as you can see, we're actually inside this range right here. This is a bit of Friday as well, but if we go to look at going to look at this Monday, yeah, we actually have this accumulation, and then we look for our manipulation. Where could our manipulation be? Well, that could be inside this unicorn right here. There's PD array overlapping with it. We look for a singular for value gap. There's for value gap here. There's for value gap there. So we look for a singular for value gap inside of this unicorn, which is right here. It's overlapping there with the breaker block. So this is our unicorn. We want to see a really easy. What we want to see is accumulation, manipulation, distribution. That's it. So where does here our manipulation be? If you go to like a bigger time frame, then you could see this is our accumulation as well. Looks like we're accumulating between this and this range. So if you go to like a bigger time frame manipulation, so we have our accumulation here, manipulation here, distribution here. If you go to the bigger time frame, this would be our manipulation. Wait, I'll just mark it out like this. All right, so accumulation here, manipulation here, distribution here. All right, so that's what we're looking for. But if you're now looking at a bigger time frame, then we're accumulating here, we're manipulating here, and want to distribute here. So that's what I'm seeing with this. So that's why I'm looking with this. So yeah, let's see even more. But that's basically it. Yeah, that's basically it. And now we look for PD arrays that could match this. So really simple. What it was manipulation here, distribution here. So does market allow that? So here could we see this high be protected? Well, we look for a rejection block here on this time frame. Well, yeah, already used that right here. Where was it? Not here, here. Here. This is our rejection block. We already used that. We set up the buy side here. So what I'm thinking now is this high is protected because of this. So we won't see us coming through this here. And could this high protect for us to go above here, like right away? Well, in the 8-hour, that was this rejection block. In the 6-hour, we had this rejection block. Then we go to that unicorn setup. And then there we look for an order block somewhere around here as well. So this 1 hour, this up close candle overlaps with this for value gap. So we look for like a candle that gives an imbalance that actually is our order block. So we could see there's no imbalance inside of here. There is an imbalance inside of here. There are 2 up close candles inside of here, those consecutive candles, but they overlap with the for value gap. They it is below the Fairvalue gap. So this candle alone would be our order block, and it's actually the biggest time frame where we have our order block. So we now have this order block and this rejection block overlapping with each other. Right there. So we could go as high as somewhere around consequent encroachment or mean threshold. So that would be around, so our manipulation could go as high as right here. But at Unicore probably wouldn't allow that high. So probably somewhere around the first quadrant or something like that, but somewhere around this range. And then we could see lower. So yeah, I do see this as a protected high for now, for us to build liquidity around here, like equal highs. So there's a high here, there's a high here, there's a high here. And actually what I'm seeing now is actually, we could see like a trend line liquidity form here. And we could see like, we could see it like right here. Or I don't know. But we could see like low resistance liquidity right here. So that could be actually beautiful. So that will actually give me more confidence or confluence. Both actually. So yeah, I could see this high as protected. Let's say we do go above this high, then this would already be our low resistance liquidity run to right here. Don't actually know how you mark this out. But yeah, it's from this high then to just to this high. Let's actually mark it out. Good. All right, so here, low resistance liquidity run. Oh, oops, actually looks awful. So let's do that on the top. Let's give it this. I don't know, I never use it like this. Or like maybe in the middle. Yeah, that looks good. Should we give it a name as well, actually? Let's just leave it like that. But yeah, this will be our low resistance liquidity run. So yeah, manipulation would go there. And then yeah, that's basically it. Nothing else really. Oh yeah, standard deviations, of course. From this breaker to this low, if we see this high as protected, then we could get a projection. And this projection came in line with this equal lows, which we marked out. So right now we're getting closer to this. So analysis is, it's giving me this analysis twice. So equal lows around that first standard deviation, which we reacted off of. That isn't random or something, but equal lows right there. Standard deviation -2, -2.5, which where we could find a retrace. If you ignore the -2.5 standard deviation, and you only look at the -2 standard deviation, that almost comes in line perfectly with this rejection block consequent encroachment. So we could see our manipulation to the upside, we could see our distribution to the downside, and we could consolidate right here. We could find a retrace around here. We could do anything in this range, but still, where is our drawn liquidity? Where is our sell side? It's below this low. Because why? Because our power of 3, our AMD setup, which would be our accumulation, our manipulation below this low, even though there's a rejection block here on bigger time frame, which is a speed bump. So yeah, our speed bump would be right here. We could retrace off of here, and then see our distribution lower into the sell side. So -2 standard deviation, we could see a retrace around here. It doesn't have to, but we probably will. Just a small retrace could be like, I don't know, even 5-minute retrace, but we'll definitely see somewhat of a retrace, or just news drops completely through it. One of those two options, but retrace around there. And then yeah, target is the sell side liquidity. Let's see if we have like another standard deviation, or another breaker setup. High, low, high, lower, low. That would be a breaker as well. So standard deviation from the A to B leg. Let's see. Projection -2, -2.5 doesn't really come in line with like anything that we have. Could be like the third quadrant, but we want to look further. And then is where we were here again. Oops. Did I mark that out as well? I think it was this one, -1 standard deviation. Now comes in line -2, -2.5 standard deviation actually comes in line with this low. But that doesn't mean anything. You gotta look at bias. The standard deviation is gonna be your bias. It just gives like somewhere. You just gotta look at the standard deviation, but it doesn't make sense with what market is actually doing as well. -2, -2.5 standard deviation. Well, we could see that low, but I'm not looking at that low now because we have this big rejection block. We turtle soup that, so I actually don't want to see it as a -2, -2.5. Actually, if we do actually, so we go to this low, and then I'll do my whole analysis again, and then I'll see this BISI, which I marked out as well, and then we go to like a bigger time frame, which I marked out, which is we don't want to see this low. So probably we'll go to this BISI, but we'll probably retrace after this BISI and then go to buy side. So we're already looking ahead, and we already have like a plan B or something you could say. But yeah, where we want to go then is this BISI, definitely this BISI. So but yeah, for now we ignore it because we don't actually want to see that. So the -1 standard deviation comes in line perfectly, like almost perfectly, but I would say perfectly with this rejection block. There's always some spreads, or I don't even know, we could even go lower than that. We could go as low as here, but around the standard deviation around there, we could find that retrace or something. It doesn't always have to be the -2 and -2.5 standard deviation. It can be the I have these standard deviations, and I've seen that one of these standard deviation works the best. -0.5 standard deviation, rarely use that. Use that for standard deviation on a bigger time frame. So if I have like a smaller time frame setup and I see like a big time frame breaker, then the first target there, if that comes in line with like liquidity, and then that will be an easy target for like bigger time frame, and like a small time frame setup could be like a nice target there. But yeah, also damn, standard deviation from this to this, which we just marked out, 0.5 standard deviation comes perfectly in line with this rejection block, consequent encroachment as well, which comes in line with this -2 standard deviation, and yeah, that's perfect as well. So yeah, for now, we don't want to see this low. Or for now, we don't want to see this low actually. We don't want to see this high. We want to see a manipulation to the upside. We can go as high as consequent encroachment of this rejection block or mean threshold of this order block. We can go as high as that, and then we want to see the standard deviations of this, -2, -0.5, which would be the rejection block consequent encroachment. We could find a retrace off of that. We probably will. Somewhere around the range from the manipulation to the low. So somewhere around this leg, which would be so we could find a retrace from this to this range, somewhere around here. Then we'll that would just be a small retracement, and we'll probably see lower into sell side liquidity, which is this low, and consequent encroachment, which would be right here. And then after that we want to see, so let's just mark it out fully. So what I just said, manipulation to the upside, could go as high as here, somewhere around here. Then we go lower into the speed bump. We could find like a retrace off of here. We'd see like a small market maker sell model. We would go lower as low as the consequent encroachment, somewhere around here. It could be definitely want to see this because the sell side's right there. So we definitely want to see it here, but we could go as low as, I don't even know, like right here. That's just what we see, but we want to see what time frame this rejection block is on, and we want to see that time frame, and we want to see a close of that candle after tapping into the rejection block consequent encroachment. So let's say this was a 12-hour rejection block. We want to see the 12-hour tap this rejection block, and we want to see this 12-hour respect this rejection block consequent encroachment after the respect of the consequent encroachment rejection block, same time frame. then we can take a trade into a buy side where we see like a nice setup. So yeah, we could go as low as, I don't know, we'll see. And then from here, we're gonna probably accumulate because there's probably gonna be an overnight session, and then we leave. Liquidity here, and we leave this buy side target for another day. And then what I said was Tuesday is going to be our manipulation to downside, which actually is here. And then Wednesday is going to be our distribution slash reversal slash distribution to the upside, which is probably going to be our reversal slash distribution. So we leave liquidity for Wednesday. We're gonna see like I don't know, manipulation to downside again, or like sweep some liquidity, and then we're gonna go up on Wednesday, and we're gonna go see buy side. And then on Thursday, we want to see a continuation or expansion. And then where is it actually? Oh yeah. So wait, didn't I mark this out already? But so we have a weekly rejection block there, and Wednesday can go as high as like this rejection block on encroachment here. We'll see like an accumulation here, and then Friday is going to be maybe our retracement or expansion. We'll see what happens. Probably it's going to be our retracement somewhere around this range. So we'll see what happens, but we leave the distribution from this to buy side for Wednesday. So let's all delete this, and then yeah, we could leave this, and then yeah. So basically, I'm good with this analysis. This is what I'm thinking. So does that overlap actually with this? Let's see. I don't even remember. Oh yeah, also, wait, can you see it on here? No, you can't. So yeah, the turtle soup right here, I had a standard deviation of the turtle soup, which is right here. So turtle soup there. So yeah, if you see turtle soup, then there's always a breaker. So I think it was from here to here. So we have swing high, we have swing low, we have swing higher high, we have swing lower low. I think it was this standard deviation. No, actually wasn't. Or was it? Wait, where was it? Oh yeah, here. So we have a high, low, higher high, lower low, turtle soup. We're still bullish, so this would be a bullish turtle soup off of a breaker, -2, -2.5 standard deviation. Where could be final retracement? Well, that would be buy side here. -2 standard deviation also came in line with like, or -2, -2.5 standard deviation. We don't gotta forget that this is gonna be a weekly speed bump, so it's definitely gonna affect like the 1 minute time frame. -2 standard deviation, yeah, almost comes to line perfectly with this. I had this marked out as well. So yeah, we could find the actual retracement off there. So yeah, we could mark this out as buy side now. So just got to keep that weekly rejection block in mind. But this is our actual retracement, where you actually find a big time frame retracement. I don't know, like 1 day retracement, something like that. But yeah, buy side there. Let's make it align with that. So yeah, I had this like this. All right, and then yeah, it's like the same analysis as this. So yeah, our draw liquidity, -2, -2.5 standard deviation. Oh yeah, I had this marked out like as my own. But wait, where actually is that buy side? Oh yeah, that's here, I think. Is that, which buy side is that? It's actually the it's actually this buy side. So can I make this all shorter actually? How do I select all of those? Control A? Or I don't know. Don't want to select this all. Wait, maybe on a 45 minute. Looks cleaner. Or like a 1 hour. All right, yeah, right, like this. All right, so this is our draw on liquidity or on big time frame. IBDA isn't in work here because, or well, is it? So 20 bars around here. This is our reversal. This will be our IBDA. This is the high, so yeah, it will be actually IBDA 20. Would it? Yeah, this actually would be our IBDA 20 as well if we go and go to that look back. So yeah, this will be our IBDA 20 as well. You could mark it out as your drawn liquidity or IBDA 20. But I'll just leave it as drawn liquidity. And this space here. And then we'll do it like this so you can see the unicorn. This will be our low resistance liquidity run. And then yeah, it'll be something like this, and I'll just do the mark the annotation here. So this would be our manipulation. We could go as high as somewhere around the order block, threshold, or the Fairley gap, or sorry, rejection block consequent encroachment. So somewhere around there, somewhere around there. Oh, this is already Tuesday, so at 3, we actually want to see a manipulation in London session. If we go like make it perfect, it won't be always perfect, but we'll see. Then we'll go in, or actually somewhere around here. And then in New York session, which is around here, we'll go to the downside. We'll hit the speed bump. In New York session PM, we'll find like a retracement. Oh yeah, I already fucked up. Because on Tuesday I'm gonna expect actually this low, but it's fine. All right, so Aiden won't see the time. He won't even see this at all. But yeah, Tuesday will be we'll hit this here. Then Wednesday is gonna be somewhere around here. We'll do something I don't even know. And we want to see a market maker buy model. Oops. All right. We'll finish off with an arrow. All right, this will be our market maker buy model. Smart one reversal around here. We could see a retrace. SI, I don't even know. So around the first standard deviation. Here to here, and I want to see a -2, -2.5 standard deviation lining up our draw liquidity. So I want to see the retrace actually be higher. And then the -1 standard deviation, I want to see that line up with the buy side as well. This is like, it isn't accurate, but it just looks cool. So yeah, it could be like somewhere around here. And then somewhere around here. Yeah, this looks good. So turtle soup here, you could see that there. Then the equal highs, which I had, I don't even know where the equal highs were. Equal highs are in that BISI actually. 30-minute BISI. Yeah, we have equal highs in that BISI. So we could mark that out as equal highs. This is actually too much, but yeah, we'll see. So yeah, it actually looks good. I want to make a perfect picture. So yeah, it looks good. Yeah, it looks good. All right, so I'll save this image, and I'll delete this image, and I'll send this, and I want to see NQ. So this is NQ. So this is what I want to see. I could be wrong. But if I'm wrong, of course, I'll learn from it, and I'll see what I did wrong. I can rewatch this video. And that's how I will learn. So yeah. Yeah, basically I've said everything. So I won't take any trade on this account again. This account is closed. I'll take trades on this account, and I'll see you guys again. I don't even know. But yeah.